Welcome back, everyone. In this example 2, we are going to be using the FIFO method, which is the first in, first out method, to calculate and to value our stock. Now let's quickly look at our notes on the FIFO method. It says here that this method is based on the assumption that stock that is bought first must always be sold first. So that means your oldest stock gets sold first, and obviously the stock on hand that you will have will then obviously be the more later or more recently bought stock. When it comes to the FIFO method, it's obviously for businesses that are selling more discrete items. For example, computers, fridges. They're not as expensive, but they can be more differentiated compared to your groceries, which are more all over and too compact. This is more discreet. It's your fridges. You don't have too many as well. You can actually keep stock of it, so we use the FIFO. Here's a few advantages and a few disadvantages when it comes to using the FIFO method. You can read through those, and I will now do the example with you so that you can understand how to do the actual valuation of the stock. Let's look at example number 2. Exactly the same as example number 1. It's asking us to calculate the total number of units on hand. Then it's asking us to calculate the closing stock, however this time using the FIFO method. Then it's asking us to calculate cost of sales using the FIFO method this time, and then gross profit also using FIFO method. Let's quickly get a move along with number 1. When it comes to your opening stock, let's read our information. When it comes to your units on hand, let's read our information given. The information below was taken from the records of Manish Fashions. The financial year ends on the 30th of June 2015. So we've got inventory on hand on the 1st of July 2014. We've got 200 items at 2 Rand per item. However, also 40 Rand for all 200 items that we paid to carriage or to transport these items. Then, during the year, in October, I bought 300. In December, I bought 100. And then in April 2015, I bought 250. In June 2015, I then bought 120. Also in December, I returned 20 to my creditors. And then during the entire year between 2014 onto 2015, I sold a total amount of 610 units. So number 1 is only asking us for the units. They're not asking us for value. So let us calculate the units on hand. So it's easy to get to the units on hand. Just like the other one, we take opening stock. You add all your purchases. You minus all your returns, drawings, donations, whatever have you. You also minus what you sold, and that will give you what you have left, which is your units on hand. So let's have a look. My opening stock is sitting at an amount of 200. So I start with 200 opening stock. I add all my purchases. It comes to 770. You can add them separately or you can add them together. It doesn't matter. So we say 300 plus 100 plus 250 plus 120. I minus my returns. My returns was 20 units, so minus 20. There was no drawings, no donations. And I minus what I sell, 610. That gives me a total of 340 units that is still on hand at the end of the year. 340 units at the end of the year. That was easy. Getting the units on hand, not a problem. Now we need to know how to value that units on hand or that closing stock. That is exactly what question 2 is asking us. To calculate the closing stock, the value of the closing stock. Now remember, this is first in, first out. So what you bought first is what you're going to sell first. So they just tell us we sold 610. But how do we sell that 610? We first allocate it to what we had bought first. So let's have a look. If you see, of the 610, let's first sell 200. That was our opening stock. So we left then with 410. So we can go on to the next one. Let's now sell October's purchases. Which is 300. So we now left with 110. Let's now also sell December's, which is 100. So we left with 10 units. The 10 units can be taken off from the April purchases, which is 250 that we bought. Okay, so we can take that off from there. So, of the stock that we did buy, we've used up October, we've used up December. We haven't used all of April. So of the 250, we can say we sold 10. So we have 240. But now let's not forget that we also returned 20. So let's return the 20 as well. So then we only left with 220 in April. You could have also taken out the returns from the December stock. It really wouldn't matter. You just then have a higher amount coming down, which would have then been 30. So you minus 30 instead. So you all understand thus far? We take what we sold minus what we had first. So we sold 110. We first take off what we started with, which is 200. So that was okay. We left with 410 still. We then take it off from the October purchases, the 300. We still left with 110 that we sold. Of the 110 that came from the December purchases, we still left with 10 units that we have to sell. That 10 units can come from our April purchases. That's why we take off the 10 there. And then don't forget, we also need to take off our returns. So in April 2015, of the 250 units, we still left with 220 units. And then obviously, so this is from April. I'm just going to write this here, April. And then when it comes to June 2015, we haven't even touched June stock. So when it comes to June stock, we have the full 120 units on hand. So this April stock, the price per item was R2.20 each. So we obviously can take the 220, we times it by R2.20 each. Okay, and that gives me 484. Now remember, you can't just take the price per item. You also need to add any transport costs and any custom duties or import duties. Now in this particular activity, we have transport costs. But this is the transport cost in total. So this 50 Rand is for a total of 250 units. We only want for 220 units, which is left. So we now need to take the 50 Rand, divide it by 250, and then multiply it by only the amount we need, which is 220 units. Why? Because this 50 Rand is for the total 250 units. We only looking for 220 units. So we need to say 50 divided by 250 and get to a unit price. Then we take that unit price and multiply it by 220 units, which is what we have left. So if we can just put that calculation here, we say plus 50 divided by 250 times 220. And that gives me a total of 528. 528. 484 plus the answer from here gives me a total of 528. Let's look at June's. June's is a lot easier. It's all 120 units at 2 Rand 50 each. So we simply multiply it by 2 Rand 50 per unit. And that gives me a total of 300 Rand. To that, we need to add our transport costs, and June's transport cost was 30, and that's for the 120 units. Remember, we have the full 120 units still on hand, so we can simply add 30, so that gives me 330. So my total closing stock that I have on hand is 330 plus the 528, and that is 858 Rand. 858 Rand. Okay, that's the value of my closing stock using the first in, first out. These were all in first, and that is why we sold those first. Okay, let's look at number 3. Calculate the cost of sales using the FIFO method. Again, for cost of sales, if we're not given gross profit, we then need to, or markup percentage, we then need to calculate our cost of sales using our formula, and that is opening stock, add purchases, add carriage on purchases, add your custom duties, less your closing stock, gives you cost of sales. Less your closing stock gives you cost of sales. So if we start, we've got our opening stock for our FIFO method. Our opening stock, we've calculated it. It's been given to us, excuse me. The value of our opening stock is 440 Rand. So we can start with our value of our opening stock, 440 Rand. We can add what we've purchased during the year. So we all know that we've purchased 300, 100, 250, and 120 units at these prices respectively. However, we can leave out the transport costs because obviously we can do that separately under carriage on purchases. So we can say 300 times 2 Rand plus the 100 times 205 plus 250 at 2 Rand 20 plus 120 at 2 Rand 50. Or alternatively, you can take your total minus your transport costs, because remember, this is called carriage on purchases. This must be disclosed separately. So we can obviously do it the long method, which is 300 units at, let me just show it to you, at 2 Rand each. So 300 times 2 plus 100 units at 2 Rand 5 cents. Excuse me, times 2 Rand 5 cents. Plus, we're then going to add 250 units at 2 Rand 20. Plus, the last one is 120 units at 2 Rand 50. If you put that onto your calculator, you get to a total amount of 1614. Don't take into account your carriage on purchases. That will be put in the next line. So if we look at our carriage on purchases or our transport costs, it's 50 plus 25 plus 50 plus 30. It's 155 Rand given to me. There's no custom duties in this particular one. minus my closing stock. Now I've just calculated the value of my closing stock in number 2, so minus the 858 gives me my cost of sales, which is 1351. The value of my cost of sales is 1351. Let's do the last one for the FIFO method. The last one in the FIFO method, number 4, is asking us to calculate the gross profit using the FIFO method, exactly like we did with the SIM method. Your gross profit is your sales minus your cost of sales. So let's start with our sales. And to get to sales, we obviously need to see how much we sold at what price. So we sold 610 units at 5 Rand per unit. So 610 times 5 Rand per unit gives me a total of 3050 minus my cost of sales, which I've calculated in number 3, which is 1351, and my gross profit is 1699. 1699. And that's the gross profit using the FIFO method. In the next video, I will explain to you how to get all these using the weighted average method. The activity is exactly the same. However, you'll notice there will be a difference because of the way in which we value stock.